You are looking at a daily chart of the Nasdaq. Welcome to my weekly review. And if you just, we're going to take a step back here in a minute, but if you just look at this current uptrend here in the Nasdaq, we had the October lows and we ran up till March, had a 1 month pullback till April 19th, and then started on this most recent uptrend. And I think we've been green and stepping on the gas since early May. It's been 2 months since we just been heavily invested. So I did want to take a step back. It's a weekly review, so I'm going to give a weekly perspective here on the Nasdaq. And you can see this made a cup with handle. We had the 38% drawdown, the Fed induced bear market when they raised rates in 2022 is 11-month, garden variety type of a bear market. 38% lasted 11 months. We had this cup with handle pattern and broke out. I'm saying like last May, and we're about just a little more than a year into this new bull market. We had the 3 waves down there last fall. And like I said, in October, I believe it was October 26th, we bottomed, and then November, December, and just started rallying here late last year and into 2024. You can see we've only had, I think one down week in this current rally. Yeah. And this hammer candle here on the weekly looks, it's getting a little extended, but that's a nice candle there. Last week, the first week of July was up 3.5%. So July started off with a bang. I know a lot of people were concerned about the index rebalancing at the end of June, and we had a couple of down days here, and that Friday was kind of a rough day. But since we've hit July, just to bounce off the 10, like I said, it's getting a little extended here, 8.3% above the 50, 2.3% above the 10, and 3.9% above the 21. But you can see that just trending higher, and it could certainly melt up. We had a record close, we had a record high, and 18,352. It could go to 19, 20,000 before pulling back. You just got to be flexible, have an open mind, and anything's possible in the stock market. So that's it for the Nasdaq. I trade stocks. I don't trade indexes or ETFs. But you can see we're just in a strong uptrend, and the trend is your friend. Don't fight the tape, and we need to use this time to our advantage, and just be flexible. And that if we have a sharp pullback, you can lighten up and then take advantage of a dip. But for now, we just take things one day at a time. The market's closing at all-time highs, and all-time highs are bullish. And so we saw the mega cap tech stocks. We had a lot of stocks on our ready list take off last week, and we were heavily invested in the tech stocks because, well, they were set up in bases. You could see here, it's a weekly review. I'll go to the weekly charts. You can see that Apple had this base on base, Dolly Parton type pattern. Pulled back. You can see that 1 week pullback, and then hit this bottom here this week of 206.59. Retested that 207 area. And then last week bounced a nice 7.5%. So Apple still looks good to me. I mean, it's a little extended here. At this point, 16% above the 50, 4.5% above the 10, but not too far away from its base. So Apple's looking strong. When the Nasdaq's up, Microsoft, Apple, and these mega cap tech stocks are going to be doing well. This is Microsoft broke out of a flat base pattern. You can see the pullback, the shakeout before the breakout, and just grinding higher. It's Kelly Slater stock surfing its moving averages. Microsoft looks fantastic. If I look at the weekly, you can see that flat base pattern there. And Microsoft broke out of that one. Okay, Meta was another stock on our ready list last week. It had a more than 7% move, just like Apple. You can see this one had this cup with handle pattern. Let me go to the daily, and you can see here it was really struggling with the 500 level, and then finally broke out on Friday, at 540. But if I go to the weekly and zoom in here, you can see how it just teeter-tottered this 500 level here, week after week after week, and finally broke out of the 500, the psychological level. You can see the last there was 504. The next week it closes at 494. Following week closes at 504, and now finally, hit 540. So we'll see if Meta can continue. And once again, this is like Apple, where it's extended but still not far from its base. And to me, any kind of a pullback, I believe that's an actionable stock there. All right. What did I do? Meta, okay, Google. Let's go to Google. I got to get all 7 in. Google was on our ready list back here, but it's taken off. It's a lot like Microsoft, where it's just surfing its moving averages and grinding higher. Nice candle there on Friday, where it closed 95% of its daily range. You could see the relative strength line blasting through the moving averages. So Google is a strong stock. Amazon, consolidation pattern here, a little flat base. This one is actionable still. I believe it's probably going to have trouble with that 200 level. There you see the flat base, pattern with the 191 paint by numbers buy point. So it's only $9 above, not totally extended. Let's go to the daily here. Yeah, 2.7% above the 10, and just I think it's gonna, like Meta, just hang around 200 here for a little bit. But I could be wrong. It could just blast right through it, or it could pull back to moving average. We'll see. But if the Nasdaq's gonna trade higher, I would imagine Amazon would trade higher as well. All right, another one that was on our ready list last week was Tesla. I believe the last 2 weeks it was been on because it broke above that downtrend line, and that's when we got in around 190 something. I want to say, and I took some off of Tesla. It was just getting too hot for me. Yeah, it was around 192 and it broke that. And I was surprised how it went through 200, not only the $200 level, but the 200 simple moving average level. And now it's up here at the 250 level. And I think it was up like, I don't know, 26% last week. Yeah, 27%. So that's a good week for Tesla. If you believe, like I do, that we're just starting a new bull market and the AI revolution is just beginning, these are the companies with the resources to win the AI arms race. And so that's a good reason why they're doing so well, performing well. And I think Tesla will definitely be one of those companies. This is the NVDA, the weekly chart. You can see how it, goes sideways and breaks out and rips, then goes sideways and rips, and now it's into like a little sideways action again. Consolidation period, still trading above what it closed above the 10. Yeah, just a tick below the 10 there. But definitely a strong stock, king of AI. They were going to report earnings August 15th. We're going to get earnings season now, and a lot of these stocks have run up into earnings. So good news is priced in. And so, you could have a sell the news kind of activity on a good report. So just got to be careful here. All right, a couple things I got to get to this week that I want to cover. Another stock that was on our ready list was ARM, and this one moved on Friday, had a big day on Friday. You could see, let me go to the weekly chart. It's a weekly review. So you can see the consolidation pattern here. There's your IPO base and it ripped up. Then it had that 164, the standard paint by numbers buy point. But man, last week it was up nearly 11%, and now it's extended. And it needs to allow the moving averages to catch up. So I'm not chasing that thing here. Yeah, it could rip right up to 200, but it's going to do it without me because I don't like chasing stocks that are 10% above their 10. A normal reaction, I think a normal thing would happen, but there'd be some profit takers after this run from what, 86 in April to what, 180 in July 5. So that's a nice run. So I would expect some profit taking. Yeah, we've had some in here, but man, that's a big move. But anyway, ARM, congrats to the longs there. Quite a few people at mcstockcharts.com told me they got into the ARMS race. So that one looks good. AMD, I believe it was upgraded on Friday, and it doesn't really matter. You just look at the charts and see that it's breaking above its consolidation area here, breaking above the 200. Yeah, that earnings line doesn't look that great, but they're going to report here July 30th. It's still 25% off of this high here, but got a little bit ahead of itself. Now it's forming a base. It blasted above these moving averages, and it kind of looks like Tesla here, where it just traded sideways, along the moving averages there for quite a few weeks. And if I go back to Tesla, you can see it had this kind of action there. I'm not saying AMD is going to do what Tesla did, but you can see the consolidation there, and it could be a little bit of stealth accumulation right there for AMD. But anyway, I like AMD, and they're going to have to report strong earnings to continue, to climb towards 200. So they report on the 30th. And what was the other one that? Oh, I like Qualcomm in this group. It broke out. We had this on our ready list as well, double bottom pattern, and it broke out, ripped higher, and then it's pulled back to its 50 for the first time since the breakout. Now it's finding support and trading back above the 10 EMA. So I kind of like that one. And then UCTT, this is an equipment stock that broke out of this double bottom pattern and is trading at new 52-week highs. You could see this pattern here, the double bottom pattern and the breakout and the new 52-week highs, but UCTT performing well. All right, that's enough for the semiconductors. I'm going to move on to the software names because I'm seeing some setups in these groups, and there's a lot of them. I'm not going to get to all of them. And if you're trading stocks, you're not going to buy every winner. You're not going to get every stock that's gapping higher. Don't even try it. Just stick to your plan. Don't try to, go crazy and buy everything on the market. But Spotify, to me, this is a quality stock that's set up in a base here. And you can see this, it looks like a 4 weeks tight pattern, 3 weeks tight. The tight trading within a consolidation. And I kind of like that. Requirement for me to buy a stock is it has to have a prior uptrend. It has to show the ability to run, consolidate. Those are the types of stocks that I like to buy. They have to show the ability to run. They can't just go sideways forever. And this one still, you can see the higher lows here. Spotify is making higher lows, supported at moving averages, still consolidating within a base. So it's definitely one that I like. CrowdStrike, similar that it had shown the ability to run and consolidate. Broke out of a base recently and now has had this 3 weeks tight area, and it pulled, what was it, 1.69% last week. So still, very close to 52-week highs. I like it there above the 394.64. I can get above that level, and I even like it more above 400. So we'll see. When you see these shelf type patterns, or you could call them a Darvis, a box type patterns with strong stocks, I like to see them break above old highs. So break out of the box, right, if you will. And it's just forming a little shelf. It's telling you that investors are comfortable owning the stock here. They're not selling it, but they're also not buying it. But they'll probably, be back to buy some eventually and move the stock higher. All right, that's CrowdStrike. MNDY Mondays. Some members at MC Stock Charts call it Mandy. Who is it? Barry Manilow saying Mandy. Jimmy Buffett saying Monday. Take your pick. Monday is the stock, though. It's formed this base here. I got to go to the weekly. You can see the consolidation patterns here as it's trying to break out. Ran up, and once again, a prior uptrend, right? Prior uptrend, consolidation, and now it's trying to break out of this consolidation pattern. That paint by numbers is 239, so it's $10 above it. Still actionable. I'm going to leave this on my ready list, but God, I hate chasing stocks. I'd rather have bought it here at 210 than 248, but what are you going to do, right? Yeah, I like getting them closer to their moving averages, that's all. And I don't like chasing. So anyway, Elastic, this is one with the AI component. You can see that it's, it gaps higher with earnings a couple times, and now a gap lower with earnings and just consolidating in a base. Got to go to the weekly chart because this is a weekly review, but just point out that this is one of the stronger groups, and this is consolidating, trading tight within the base, which I like, with the ability to run and consolidate. So This one meets the criteria as well. I'm going to leave this one on the ready list, even though it had a good week last week. I still think that one is actionable. App Loving, another one that I like. Like I said, I'm not going to go through all these. There's a bunch more, but I have to stop somewhere. This one consolidated in a base. Looked like it was going to move higher on Friday, then decided, I think I'm going to pull back. And yeah, it gapped higher at the open. If I go to a 5-minute chart, I believe. Yeah, gapped higher at the open. Looked like it was really going to run hard, and then sellers came in and it just, closed that gap there. So not a big deal. It's still consolidating within a base. All right. The drug stocks, got to talk about the drug stocks because they were in the news. And if you don't, if you just chart read and don't follow the news, it doesn't look like anything happened with Joe Biden and Bernie Sanders and, some report about, kind of a flimsy report about their drug causing blindness, which is a pretty severe side effect. But anyway, it's 4% off of its high, 5 weeks tight trading. That's really a flat base. You got this cup with handle pattern and it ran up and now it's formed a flat base pattern. Yeah, 5 weeks is a flat base, kind of looks a little like CrowdStrike without the little wrinkle here. We're just kind of going sideways here. Yeah, like I said, if you don't, if you just look at the weekly chart and don't follow the news, you just go, oh, okay, it's trading tight in a flat base here, pull back to a moving average. Actually, for the first time since it broke out here, so Novo Nordisk looks fine. Eli Lilly, another one of these drug stocks with the weight loss, diabetes component. They had an Alzheimer's drug approved, and it just broke out of a double bottom base here, and it's minding its moving averages, surfing its moving averages to higher prices. They don't report till August 8th, but I believe this will be your first $1 trillion drug stock, which is not saying much. It's only what 130 billion away right now. So a couple more good quarters, and also $1 trillion's not all cracked up like it used to be, right? It used to be worth a lot more. All right, Baxter sold their kidney division and it got a little bump yesterday, 5%, but I think they see the writing on the wall with these weight loss drugs. It stands to reason that when you lose weight and you become healthier, that you're not going to have these issues, heart issues, kidney, liver issues, a lot of things, a lot of ailments clear up when you get healthy and lose weight. So, yeah, try to take care of yourself. I'm going to move on here because I have some stocks that I want to get to this week that are, they're lower price stocks, probably not talked about as much, and but they're showing flashes that I just cannot ignore. This is IREN, and I don't want to get into the business or anything. I'm just looking at the stock. It was up 33% last week, and I think we'll take that every week. On the daily, you can see that it's just pulling back to moving averages after this big move. Pull back to the 21 found support and ran up, pull back to the 10 found support, and now traded at an all-time high on Friday. So this is definitely one to watch. That's IREN, Iris Energy, WULF. And normally I do not, entertain, stocks below $10, but I'm just showing these for the sake of showing them that they're strong stocks. They're flashing, to me, they're flashing signs of potential big movers here. This is TeraWulf, and this was a $43 stock here, and now it's trading at $5. The earnings line is heading up. This is not to be ignored here. This big volume moves about 7 weeks in a row. Yeah, I know it was a $2 or $1 stock, but now it's $5. Okay. And it's finding support at its 10 EMA. So that's something that I'm not going to ignore. I don't own it yet, but it's definitely got my attention. BitDeer text, like I say, I don't even know what these things do, but it's flashing for sure. Yeah, I don't know what it does, but definitely it's going higher. So that's what it does. It was up 13% essentially last week. And the last one that I'm going to show that is definitely flashing is Core Scientific. Now this one just IPO'd recently in February, and that's got the spirit of like a high, tight flag. You could see it ran from, I don't know, $4 up to 10. So it had more than 100% gains, and now it's just kind of doing this, kind of flagging. So I'm going to watch this. I'm not going to ignore it. And it's above $10 now. Anyway, I just wanted to point those out. And then I'm going to get to the retail stocks. Retail has been hurting. If you own retail, you got to be careful. That jobs report showing a slowing economy, consumers pulling back. The Nike and Lululemon, which are a big part of the XRT, are not doing well. They're having market share taken from them, I believe, and that's a problem. So I'm not going to show you Nike or Lulu; those things are dying. But I do want to show Elf because I believe Elf is taking market share. But this thing is it's a shaker and a mover. It moves a lot, and it's formed this cup with handle, and I just, it's doing this here. After the earnings report, it gapped up and then pulled back to moving average. Then it ripped up, then pulled back, and then it ripped up and pulled back, and then it trades higher, then pulls back to the 21. So it's supported at the 21 now. But if this thing craters below the 21, I'm not real fond of that action. So I'm really watching this stock next week. You can see it's getting a little wider and looser in the trading as opposed to the prior moves here where it was, trading within a $4 daily range, $4 daily range, and now it's trading in, $10 daily ranges there. So you see the low is 190, the high is 200. Yeah, $10 at a $4. I know it's a lot higher. It's a $200 stock now, not a $130 stock, and that makes a difference, but I'm just watching this one closely. I do believe they're taking market share. And if you look at the longer term trend, this one could be a big winner for a long time. And so that's why I like it. That's why I'm watching it. Bros is another one I think is taking market share. This one's just breaking out of a stage one, Weinstein stage one base. And you can see the earnings line trading higher. Bros looks good to me. And yeah, it's, since the breakout from its earnings, you can see the triple digit earnings growth and 39% sales growth. It's getting institutional support there. So that's another one that I like. CMG dropped it from our leading stock list, 50-for-1 split, trading below the 50 now, and it had 27 million shares in the float. Now it's got like 1.35 billion. So it's just going to be a battleship that I'm not interested in anymore. A couple of others that, Deckers, this is selling off due to the Nike and Lululemon weakness, but I believe they're taking market share. It hasn't done well since joining the S&P. You could see it close below the 50, but it could certainly rally back above. And CROX is another one showing weakness, close below the 50, which I don't like. Certainly it could rally back above, but retail's been, and especially retail apparel, retail shoes has been hit pretty hard, like I said, due to the Nike and Lululemon reports. But I believe that there's going to be winners and losers, and I believe Deckers is going to be a winner. Crocs is, in a different category, maybe like a casual type shoe. Anyway, that's it for me. Thank you for watching, except for in honor of the great Steve Jobs. I'm just going to quickly, I have one more thing. I'm going to go over some bases. Somebody asked me what bases I like, and I'm not really particularly fond of any base, but I do like bases. Not any specific one, but there are some basic bases that I look for, first of all, like I said earlier, you got to have the ability to run. I don't want stocks that just go sideways, right? Like some of these oil and gas stocks like MRC Global. I mean, this has gone sideways for like 4 years. I'm not interested in that. It's not going to run, right? I mean, it was yeah, I'm not interested in this. It was $12 in May of 21. Well, here we're in July of 24, 3 years later, and it's at $12. So we're not interested in stuff like that. I'm interested though in stocks that have the ability to run. Goldman Sachs, runs, consolidates, it runs, now it's consolidating. So a flat base, which is a 15% or less, just consolidating within a base, moving averages trending higher, little pullbacks to moving averages. Yeah, that's the kind of stock that I like. And yeah, that's going to be on my ready list this week because I like that type of base pattern. And I don't want to give away all of our secrets in MC stock charts, but that is definitely one that I like. And I think I mentioned this one earlier. Spotify just consolidating within a base. This is an elongated consolidation, but flat base, 15% or less, more than 5 weeks. And this one is just like Axel Rose saying, it's testing our patience. If you own this one, you want to see it blast off. With the Nasdaq doing so well, you want to see Spotify making new highs, and it's just not cooperating right now. It's only 4% below its high, though. So be patient, folks. You can see the tight trading here on the weekly, and I'm repeating myself. Anyway, a base on base pattern. I believe I showed this one earlier too. Apple, the base on base. That once again, you're going to have to be patient if you're going to trade in these base on base patterns. Another one that I like, just consolidation patterns. Anything that there's one right here with Abercrombie and Fitch consolidated for a while. Anything that ran up and consolidated. So some sellers have to get out, right? We need some sellers to exit the stock, profit taking, whatever. And then it gives us new buyers a chance to get in and make profits on an appreciating asset. So anyway, that was Abercrombie and Fitch consolidation. Cup with handle. I think I've showed these two already. Meta had the cup with handle here. Is another pattern. And patterns are patterns, right? I mean, like I said, I like stocks and bases, but there's no real favorite one. ELF is one that I'm watching right now in a cup with handle pattern. So a lot of the winning stocks, model book stocks over time have broken out from cup with handles. And just, these different types of bases here. The double bottom, I mentioned Lilly. Double bottom base is another popular one. Taiwan Semiconductor, I don't think I showed that one yet. This is the double bottom base where it makes a high, then sells off due to some profit taking, makes another run up, doesn't take out the old high, and then undercuts the prior low, which creates that double bottom base, which is, to me, just looking at it logically, it's like, okay, the stock runs up and then profit takers come in. Then we have some buyers and more profit takers, right? They want out of the stock. And then as institutions start buying and nibbling, it forms this double bottom pattern. And, they had strong earnings and, whatever, new contracts, whatever, anything upgrades, anything can spark a rally in a stock. All right. That was the double bottom. And I especially like pullbacks to moving averages. A strong stock, obviously CAMT is a strong stock. Went from 48 to 89, 90, consolidated here. And now it's run up, pulls back to a 21, rips higher, pulls back to the 21. Yes, thank you very much. We like that. And then rips higher. So what are you going to do next? You're going to buy it up here? I'm not. I'm going to wait till it pulls back to the 21 again, because that's its behavior. That's what it's been doing. Doesn't mean it's going to do that again. It could obviously crash and burn and slice through all the moving averages and trade lower. And it can also keep moving higher without pulling back to the moving average. But I'm not going to chase it. I would wait till it pulled back to moving average. I was lucky to buy this thing in the 90 area, and I thought I would have trouble with 100, but it just went through it like a hot knife through butter. DELL is another one I think is finding support at the 50 here. Yeah, and it pulled back, excuse me, to the 50, ran up, pulled back to the 50. So I'm expecting another spike from DELL. So pullbacks to moving averages. I showed you this one earlier. IREN is finding support at the 21 and now the 10. So I look for pullbacks to moving averages, and then the undercut and rally stocks. We've seen a lot of this recently, where stock will undercut its 50 and then rally right through it. Obviously, this one has shown the ability to run. It's had this big run, and then it consolidates, undercuts the 50, rallies right back through it, and then it pulls back. And what was once resistance is now support, finds support at the 50 and rips higher. Arista Networks has been a fantastic stock. ALAR, this is cybersecurity, Israeli stock. Real micro cap, 270 million, but it is undercut the 50 and rallied right back through, and it did it quick. And that's what you want to see. I don't want to see it wallowing below the 50 here. I want it to go under and then rally right back through. And ALAR certainly did that. And then a couple of IPO bases, CAVA. Yeah, I'm going to stop there. That's enough bases. CAVA broke out of this IPO base and took a while, but yeah, I kind of like that action there. I like that stock. And then Snap was the ultimate. Snap was in a, I think it was like a 3-year IPO base before it actually moved higher here. So you got to be really patient with that one. And then it moved higher, and then sold off with the bear market and has not really recovered. Anyway, that's it for me. Thank you for watching. Like I said, the Nasdaq's doing well, making record highs. We've had a lot of stocks on our ready list that have done really well. I have a new list that I'm going to post on Monday morning. So thank you for watching. And at mcstockcharts.com, we never give up.